Hello and welcome to today's Daily Trade Watch brought to you by the Live Trade Room. Now today is Friday the 3rd of August 2018, and what we look to do in this very short video is to identify some high probability trading opportunities. So just before we begin, if we can start as we always do with our risk warning, please obviously do familiarize yourselves with the risks involved in trading these markets. Okay, so let's get straight into the markets, and we'll have a look for some high probability trading opportunities that we can utilize for the day ahead. So for this, we'll get up our trading platform, and I suppose the first thing is to consider we've had a significant week in terms of central bank decisions and statements, and the markets often look for these very, very clearly to determine perhaps direction. So with that in mind, we can see that we've seen some strength come into the US dollar just over the last three, and perhaps even including today's candlestick as well. Now we've got one other major news event for the week to finish the week out, and that is our NFP number. So we'll have a look at Friday the 3rd of August. And we have a non-farm employment change number. Now it's expected to be 191 jobs. And the other thing to take note of as well is that there's an expectation for average hourly earnings to increase from 0.2% to 0.3%. And finally, the unemployment rate is supposed to decrease as well, which are all very, very positive items for the US dollar. So it's no surprise to see the dollar strengthen. You may or may not know right now that the Bank of Japan had a rate decision. They kept rates at 0.1. The Fed kept rates at less than 2%. And yesterday, the Bank of England decided to increase rates from 0.5 to 0.75. So a 25 basis point move to the upside. Ordinarily, that would be quite positive, potentially. That would be quite hawkish for the British pound, but in actual fact, what we saw through the news flow and the subsequent price action is that things became very, very hawkish. Carney, the chairman of the central bank, was alluding to the fact that the UK economy obviously has some tailwinds with regards to Brexit, but in addition to that, there's other tailwinds that they need to be aware of, and I suppose the rate of increases are supposed to decrease ever so slightly. So he alluded to the fact that he'd be looking to increase rates slowly over the next couple of years, and certainly not at the same pace as the Fed. So there's a little bit of separation there, I guess. Yes, both central banks are increasing rates, but they're doing so at very different rates. So that, and for a number of other reasons, there's a bit of a dovish approach taken to the pound yesterday, which is very likely to continue. Now, we do need to be mindful that we are trading today's news, and it has the potential to be really volatile. So with that in mind, we had a nice strong move yesterday. We are flirting with these lows. If we look at the euro dollar, we're flirting at these lows, and we've been range bound now for 2 months. In fact, 3 months effectively, nearly. We've been ranging between the 118 and the 115.36 level. So as long as we're within that price range, we'll continue to just see how this price action unfolds. You can see that the significant drop yesterday. If I just take you perhaps down into the 15-minute time frame, we had initially we had a really strong move to the upside, and that reversed pretty quickly. We saw 100 pip reversal, and we were able to trade this yesterday for those of you that were in our trading room, and capitalize on a really strong move to the downside, and it's still pushing lower even today. Okay, so that's the pound dollar. It's worth just touching upon that. So with this news event coming in, we just need to be a little bit careful we don't sort of overload on the dollar. However, if we get some positive news today, it might be a green light to continue trading this dollar over the shorter term. So as we flick through the markets, there's a little bit of indecision as a result going into this non-farm payroll decision. We are trading around the lows of yesterday's candles. So maybe it's just prudent for us to just step back and wait for the news event. and then see if we get some clear-cut direction and opportunity. So as we flick through some of the remaining markets, we can see that, I suppose, from a high probability trading perspective, we're obviously entering the summer markets as well, so that has a knock-on effect. And as we scroll through the gold market, we see these prices continuing lower, and just hanging around yesterday's lows as things stand. So we do anticipate this market to continue lower. We're just going to ultimately just wait for the non-farm payroll today to see if that can give us any additional direction and further momentum. The US oil market, we're kind of trading sideways, really. We are entering obviously summer market, so it'll be unlikely to see any significant move in any direction, really. We're more likely to get a little bit of sort of sideways moving and a bit of a pause. So don't forget, a lot of the bankers are all taking holidays in the month of August, and your politicians are taking some time off as well. So there's a distinct lack of drivers in these markets. Okay, so that just about concludes the choppy nature of the FTSE is a really good example. So we're actually going to reserve a little bit of judgment in today's videos, really. We do anticipate the dollar to continue its strength, but we're looking for key levels to be broken to the downside. And under those circumstances, we'll be happy to continue to trade the US dollar and the strength potentially behind the US dollar. The sentiment is good. The fundamentals are pretty good. So I suppose the significant negative is that Trump himself doesn't want interest rates. The dollar to strengthen. He'd prefer a weaker dollar, and it will assist with exports. So there is tailwinds. So it's just important to be aware of market conditions right now, and obviously protect yourself at all times with a real strong approach to risk management. Okay, so that just about concludes then today's Daily Trade Watch. You're very welcome to connect with us on YouTube, Facebook, Instagram, Twitter, and LinkedIn. The details are there currently up on screen. And all that's left for me to do now is to thank you, as always, for joining us. Do take care. We look forward to seeing you next time. So from everyone here at the Live Trade Room, take care, and we'll speak to you soon. Bye for now.